Hey everybody, this is Jim at SP500chart.com. It's about 4:15 after the close on March 18th, 2013. Before we get into the chart, I just need to remind you, as always, and I'll take my time with it this time, instead of trying it in one breath, to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you should be making investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts, so let's take a look. Okay, so we had a second down day, and it was down by a considerable margin, not horribly down, but clearly down in a manner which shows another broken trend line. Now, keep in mind, when you break a trend line, that doesn't mean that it's all down from here. Matter of fact, it wouldn't surprise me one bit if at some point we rally back and we tag that 1565, even though we've broken trend. And if we did so, that could happen in the form of a back test. Now, depending upon where you draw this line that I'm moving right here, I've had it right at this position, allowing for a couple of days to dip underneath it in the middle of March. Well, I say the middle of March. We're still the middle of March. Earlier in the middle of March, the 12th and the 13th to be specific. So it wouldn't surprise me if we were to gather up a little steam and head back to 1565. It just, it wouldn't surprise me, especially given the kind of resilience that this market has shown. But obviously this is a broken line. This is a broken line, and I think it's pretty clear too that we have broken once again underneath this red line that served for as an ascending channel support line for the first 2 months, almost 2 months, and 1 month and about 3 weeks of 2013. So a back test wouldn't be out of the order, but I think with these broken support lines, I think we will come down and we will test some support, probably at least 20 to 30 points lower than where we closed today. I just think the market needs to do that. I think we felt like it's needed to do this for a long time. So, why this move today? And now I'm gonna get a little political. People say this move was because of the actions that the Cyprus has taken to essentially raid bank accounts by everyone who's a citizen of Cyprus that has money in the bank. The government just says, okay, close the banks, we get 10%. And, you look at that and you go, whoa, what right do they have to do that? And that's a good question. But another question that I think one could ask is, what power do the people of Cyprus have to stop it? And let me extend that just a little bit. And I'm going to make a statement that I hope never comes true, but it would not surprise me, folks. One of these days, it would not surprise me if we wake up to the news that our 401ks, our simplified employee pension plans, our retirement plans of various types are suddenly subject to a one-time tax. That would not surprise me one bit. I hope it doesn't happen. But I say that for one reason and one reason and only. And I'm not picking sides, Democrat, Republican, Independent. I just say that because it wouldn't surprise me. And you need to think about the fiscal policy that the United States has been operating under and the disregard. I heard somebody say that if the United States were a family, it would be like a family of four bringing in $75,000 a year and overspending about 30 grand and being about $140-something thousand in debt. It just, if it weren't for the fact that the Fed can print money whenever they want to, we would be in deep weeds. And the countries that can't print, they are in deep weeds. But as far as the value of your dollars, we're still probably in deep weeds. So as we look at the markets having climbed like they've had so impressively off of these 2009 lows, the question that I think can legitimately be asked is, well, what does this look like in relationship to the value of my dollars? We can't get into that now because we just read charts. So what happened today? Well, like I said, we broke unquestionably now this lower light blue support line, this lower red support line. But again, what that means is that these two lines now have very likely been turned into resistance. This green line, by the way, is nothing but the target from our inverted head and shoulders pattern. We missed that by a fraction, and I made the statement in the notes that if we don't come up and actually tag that line, missing it by 1.5 points, I don't think that's enough to say inverted head and shoulders don't work anymore. So, but again, I've seen a number of these patterns, and there have been a number of times when I've seen a broken channel, and I go, well, I guess it's not going to make it, only to see in a couple of days we get a nice big rally, back test rally, whatever you want to call it, and the pattern plays out exactly like it should have. So I'm going to leave the door open for that, but at the same time, I'm going to say this move up to about 1563 roughly is, where did it get to? About 1563. That's good enough. That's close enough to 1565, where if we do fail here, I wouldn't feel that bad about it. So guys, going into tomorrow, all I can say is at this point is if we rally back up to either of these two lines here, then I would expect the market to be turned back there, as that would complete the back test of both of these lines. And if we were to come down and keep selling down to the 1520s over the course of the next 2 or 3 days, then I would say that would represent a buying opportunity. So what am I saying? Well, I would think a move to the 1520s would be a buying opportunity, and I think a move to the mid 1560s again would be a selling opportunity. So take that for what it's worth. You do what you need to do based upon your research and your thought processes. But pretty clear here. This line is broken. This line is broken. This line is broken. And I don't really see support. This is our brown line that is a rising line from our long-term highs. It's a little, what's the word I'm looking for? Malleable. This is not a super hard barrier. The S&P has gotten over this before. But I'll remind you that when it did get over this line back in 2011, the markets had absolutely no problem coming back down underneath it. So I don't think we can really count on that for much support, but I think we could count on the neckline here for support, and this rising yellow line should also provide some support. So to me it looks like our upward trend has broken. Time for a breather. Time for the market to give up some over the next I don't know, could be a week. I can't tell you for sure. Part of it depends upon whether or not we complete that back test. If we get on up to 1565, then I think we're probably in for, a number of days of selling, since that would be the point at which you would expect the market to turn back down. So guys, there is your video for March 18th, 2013. Thank you for your interest in what I do, and I appreciate you for your support, and I hope you get something out of this. And again, I just want to remind you, do your own research, incorporate all that you learn here and elsewhere into an investing style that fits your financial situation and that fits your personality. So thanks again for watching. Take care, everyone.